Today, we're peeling back the layers to reveal the unvarnished truth about Vancouver's real estate market. A market at a crossroads, where once unthinkable conditions are now the norm. We're talking about approximately 2,500 newly built condos sitting completely empty and unsold across Metro Vancouver, a number that has shockingly doubled in just 12 months. This isn't just a blip, it's the visible symptom of something far more profound, something that's creating a downward spiral across the entire housing ecosystem. If you own property in Vancouver, are thinking of buying, or just want to understand the forces reshaping one of Canada's most expensive cities, you'll want to stay tuned because the insights we're about to share could redefine your understanding of this market's future. The core of Vancouver's current predicament is a mass exodus happening on two fronts simultaneously. Tech workers are fleeing, and investors are pulling billions in capital out of the market. Let's start with the tech brain drain. In 2020, 5 alone global tech layoffs have been staggering, with Vancouver heavily integrated into the North American tech ecosystem, feeling every cut. Major companies like Microsoft, Amazon, and Meta have reduced local headcounts. But layoffs are only part of the story. A more significant trend is the voluntary departure of skilled tech workers. They're leaving not because they lost their jobs, but because they've realized they can do far better elsewhere. Studies show that a significant portion of Canada's top STEM graduates, especially in computer science and software engineering, are choosing to work outside the country, predominantly in the United States. The reason is simple. Salaries in cities like San Francisco and Seattle can be double what their Vancouver counterparts earn, even before considering the exchange rate and lower income taxes in some U.S. states. Beyond compensation, these professionals seek opportunities with globally recognized brands, clearer career advancement paths, and projects with global scale and impact that Vancouver's still growing tech scene often can't match. This outflow extends beyond just tech workers. Canada saw nearly 30 non-permanent residents leave in the first quarter of 2020, a 54% increase year over year. Many of these are highly educated international students and temporary workers, precisely the demographic that supported Vancouver's rental market and fueled future homeownership demand. British Columbia even recorded a rare population decline, its largest quarterly drop since 1951, primarily due to this collapse in temporary residents. Vancouver has always attracted young talent for education and early career opportunities, but it's now struggling to retain them as they progress and start thinking about buying homes and raising families. The combination of sky-high housing costs and comparatively lower salaries acts as a powerful incentive to leave. Compounding this demographic exodus is a dramatic withdrawal of capital. Investor participation in Metro Vancouver's condo market has plummeted from 50% of buyers between 2021 and 2023 to just 7% in early 2025. This isn't a gradual shift. It's a cliff edge that starves developers of the pre-sale capital crucial for construction financing. Foreign investors withdrew a staggering $16.8 billion from Canadian securities in one quarter of 2020, for the largest outflow since before the 2008 financial crisis. Domestic investors are also sending billions abroad, with roughly half of it heading to U.S. markets. Veteran Vancouver realtors describe the West Side market as dead, noting that foreign capital, particularly from China, which once flowed in during the boom years, is now flowing out. Policies like the BC home flipping tax, the federal property flipping tax, and the extended federal ban on non-Canadian residential property purchases have further discouraged speculative investment, effectively shutting off a major source of pre-sale capital for developers, particularly in areas like Richmond that historically saw high foreign investment. The impact of these twin exoduses is starkly evident in the current market statistics. Our inventory levels are now among the highest we've seen in years, particularly for October 2025, with months of inventory pushing past 7 months, a record high. This means there is a significant imbalance. A lot of properties are on the market, but sales are simply not keeping pace. While October 2025 sales figures were somewhat in the middle compared to the last decade, and even saw a slight uptick from September, the sheer volume of available properties is putting immense pressure on prices. New listings have been high, but interestingly, many sellers are choosing to take properties off the market rather than relist during the holiday season, hoping for a better environment in the new year. And those prices, they continue to drop. Benchmark prices for detached houses have returned to around 2022 levels, plateauing and then declining. Since 2023 and 2024, showing a clear downward trajectory since March 2025. Townhouses are following a similar, though less dramatic, path, with prices falling since May. This is partly due to the struggling condo market, as many townhouse buyers are typically condo sellers who are now seeing their equity diminish. For the condo market, the story is even more dramatic, with benchmark prices now sitting below 2021 levels, somewhere between 2020 and 2021 figures. This is particularly pronounced for one-bedroom and studio units, which were heavily influenced by the investor segment that has now largely exited. The rental market, once a bastion of stability, is also struggling. National rental prices for November 2025 dropped 2.2% year over year. But in Vancouver, the decline is a far more significant 7.4% compared to October 2024. This softening rental income is a major deterrent for investors, exacerbating the capital flight. Landlords are now offering incentives like months of free rent, a phenomenon unheard of just a couple of years ago. Experts predict this rental rate decrease will continue well into 2026, as more rental inventory comes online, leading to increased competition among landlords. Even the office market is not immune, with downtown Vancouver's office vacancy rate hitting 12.6% in the third quarter of 2025, the highest since 2004, driven by major tech companies reconfiguring and reducing their physical footprints. The construction sector is in crisis. Metro Vancouver housing starts in February 2025 fell by nearly 50% year over year. Condo starts are down, and an estimated 100,000 approved homes are currently stalled due to financial constraints. It simply costs more to build a unit than the average person in the Lower Mainland can afford, with all-in costs pushing developers to prices far above what local buyers can manage. Major development firms are laying off staff, and the level of developer-owned unsold inventory is the highest in 24 years. This isn't just about statistics. It's about real people. We see young couples underwater on their condos, facing mortgage renewals at significantly higher rates with reduced household incomes. We see small investors who once viewed properties as retirement plans, now losing equity and bleeding money monthly, caught between bankruptcy and unsustainable losses. These stories multiply, creating a cycle where economic uncertainty, high costs, and limited opportunities drive more people away, further softening demand and stalling growth. the market that existed in 2021 and 2022, characterized by bidding wars, rapid appreciation, and confident investors, is gone. What replaces it is still unclear, but a prolonged period of adjustment is likely, with prices finding a new equilibrium based on local incomes rather than speculative appreciation or foreign capital. The foreign buyer ban remains. Capital has found new homes, immigration targets are reduced, and the tech industry remains volatile. Recovery depends on many external factors, from significant interest rate declines to government support for buyers and developers. This is the challenging truth of Vancouver's real estate market. It's undergoing a fundamental reset. While this period can be unsettling, it also presents unique opportunities for those who understand these dynamics. Whether you're navigating this uncertain terrain as a seller, needing to understand current valuations, or a buyer looking for strategic entry points, expert guidance is more crucial than ever. Don't face this complex market alone. If you're considering buying or selling property in Greater Vancouver and want to understand how these truths apply to your specific situation, I'm here to help. My contact information is below, and I invite you to reach out for a personalized consultation. Let's discuss your options and strategize your next move in this evolving market. Call me today.